Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the weekly time frame, where we're looking for a bigger impulsive structure to the upside, and inside wave 3 we have the 5-wave green count 1, 2, 3, 4, 5. Common target area for your wave 4 is the 382 to the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target area between 57.5k and 53.3k. The invalidation is 49.3k, the 0.618. Has to be said that the wave 2s in this uptrend here retrace to the 0.382 Fibonacci, which is an uncommon target for a wave 2, but a target nonetheless and more prevalent in strong trending markets. A even more bullish scenario is a triple 1-2, 1-2, 1-2, and another 1-2 in blue. Here we have the common target area for your wave 2 in blue, the 0.5 to the 0.786, taken from the low to the high of this wave 1, giving you a target area between 53.3k and 44.2k. The 382 is uncommon for a wave 2 at 57.2k, and the 886 is very rare at 41.4k for a wave 2. The invalidation is taking out this low at 38.5k, and if this happens, that does increase the probabilities for more bearish scenarios. On the weekly time frame, this volume profile has played an important role. The volume profile, as you cannot yet see, there we go, is taken from this range over here. So if the value area high, point of control, value area low. Nice area of resistance, the value area low, and when we broke into the range, we went to the value area high, point of control, and we broke out with a little bit of an order block just above the value area high here as well. In the bullish scenario, preferably, you're going to stay above the value area high. If you do get back inside this range, it increases probabilities for price to move to the point of control at 38.5k, which would increase probabilities for more bearish scenarios moving towards the lower end of this volume profile at 30k. The value area high is sitting at about 49.5k, and if we then also open this channel over here, which is quite interesting, taken from the low to this low over here to the first time hitting 30k, you can see that also this one is nicely respected, moving to the higher trend line of the channel, then the midline, and eventually we broke out. Currently we're testing the upper trend line of the channel once again, and if we continue ranging here for a little bit and then potentially lose this trend line and move to the midline, you can see that the midline of the channel is in confluence with the value area high on a weekly time frame. So this is very important support around 49 to 50k. The bullish scenario on the daily time frame, which is very interesting, is this ABC zigzag, where we have a diagonal structure in a wave A looking for a zigzag to the upside in a wave B, after which we want to see an impulsive wave C to the downside to take the low at 56k. What is so interesting about this scenario is the fact that price then creates a triple top. You're going to fake out the people that are greedy, FOMOing, looking for higher. You're going to move to the downside. Taking out this low will definitely install some fear and panic over here at the bottom, after which we can move towards the upside. Common target area for your wave B is the 382 to the 886 Fibonacci, taken from the high to the low of wave A, giving you a target area between 63.1k and 71.9k, and this wave B preferably ends after the 0.382 Fib time, taken from the start to the end of this wave A, comparing A with B in time, which is the 19th of May. The invalidation for this scenario is price moving towards the upside, which is then also the most bullish scenario, is very simply a wave 1, 2, 3, 4, 5. So you expect continuation instead of an A, B, C and a move down. You're expecting continuation to the upside in a wave 3. More locally, on the 4-hour chart, the currently highest probability bullish scenario is a finished wave 1 or A, but an unfinished 2 or B, after which we then expect continuation to the upside. Common target for your wave 2 is the golden pocket to the 786, taken from the low to the high of wave 1, giving you a target area between 59.9k and 58.4k. The common target area for this wave B also includes the 886 at 57.5k, but this is a very rare target for wave 2, so in the more bullish scenario where you want to see continuation, you don't like to hit the 886 here. Opening some of the additional support and resistance areas, you can see that in the target area for B or 2 we have this blue box 59.460k and the lower blue box 57.9 to 58.3k, and even below that one more point of control at 57.2k. After this wave B or wave 2, we then want to see strong impulsive continuation to the upside. Inside this wave B or 2, we are then looking for a 3-wave structure to the downside in a WXY. Wave W is a zigzag, wave X also a finished zigzag, and then inside wave Y we're either looking for a zigzag to the downside or a flat structure. Common target for your wave Y is the 0.618 to the 1.236 trend-based wave extension taken from the high to the low of W to the high of wave X, giving you a target area between 60.1k and 56.8k. Preferably this wave Y is ending after the 0.382 fib time taken from the start to the end of W to the end of wave X, comparing wave W with wave Y, and this one is sitting at 10 AM Central European Time today. Inside this wave Y as mentioned, we are then looking for a 3-wave structure to the downside as well, either in a zigzag, which is a 3-wave bounce in B and a 5-wave C towards the downside, or we have a 3-wave structure in a wave A, 3-wave move in a B, and a 5-wave move to the downside in wave C. Because of the news as well yesterday, this move to the downside on the lower time frames is quite messy, so just keeping an eye on both of these structures. The flat is also interesting as we do still have some resistance to the upside. First of all, this small blue box between 62.8 and 63k. Then the bigger blue box between 63.4k and 64k. On the weekly time frame, the bearish scenario is a finished A, B, C to the upside, or at least soon to be finished. But we have a 5-wave structure in a wave A, 3-wave structure in a wave B, where the common target for a wave B is the 382, and that's different than a wave 2, because for a wave 2 the 382 is uncommon, but the 382 is common for a wave B, taken from the low to the high of A, and then a wave C to the upside, where preferably 1, 2, 3, 4, 5, you're ending that wave C over here. Target area for your wave C is the 1 to the 1.618, which is where we are right now, and after C you're looking for impulsive structures towards the downside, where this scenario over here is probably a scenario you recognize, as it is very similar to a wave A, B, and then the wave C to the downside, after which we expect continuation to the upside in the bullish scenario. But now we have a wave 1, 2, and we look for continuation to the downside in a wave 3. Wave 1 here is then a leading diagonal. Common target area for your wave 2 is a little bit different than a wave B though, as for a wave 2 is the 05 to the 786 taken from the high to the low, 70.1k to 65.1k, 886 is rare, 71.9k, and the 382 is uncommon at 63k. This wave 2 preferably is a 3-wave structure and commonly a zigzag, where also this wave 2 preferably ends after the 382 fib time, which is also on the 19th of May. After this wave 2 we expect a much bigger move towards the downside, where preferably you're also losing that 49.5k level, where we have the value area high of that big volume profile as well as the midline of the channel, and you're gonna fall back inside that range. On the 4-hour time frame, the most bearish scenario, however, is not moving towards the upside, it's actually moving towards the downside. Definitely the lowest probability at the moment to take out this low compared to this high first, but we always need a bearish scenario locally as well, where we have a finished A01, finished 2B, looking for a move to the downside, where you're working on another wave 1, 2, and then a bigger wave 3. The reason that the probabilities for this scenario are lower than the WXY at the moment is because of the structure in 2 or B in combination with 1 or A. So Because in wave 2 or B we have a wave Y, which has to be a zigzag to the upside in a 535, this wave W has to be a flat. It's not allowed to be a zigzag or any other structure in a sideways double combo. But the only way to make this wave W a flat is to move this wave 1 or A from this low to this low, so that you have a wave A, B, C, creating a flat structure. However, ending wave 1 or A at this low does not create a nice final 5-wave structure to the downside in a bigger 1, 2, 3, 4 ending at this pivot over here, and then a 1, 2, 3, 4, 5. That would be preferred, ending over here instead of here, but in this scenario we can't do that. So it does lower the probabilities for this particular scenario. However, just like in the bullish scenario, we do want to see this low taken at least one more time, but in the bullish scenario we want to end wave 2 or B over here after some proof of support at the support areas here, right? Looking for either a market structure change, bullish CVD, RSI, MACD, money flow indicator, whatever you're looking for, candlestick patterns, right? Can be absolutely anything, but proof of support, after which we then expect continuation. While in the bearish scenario, we don't want to see proof of support. We want to see volume increasing and price losing these levels very, very quickly. We do have CVD divergences on the chart. We had bullish CVD divergences over here, or still have, because the target is actually this high, but it is a bullish CVD divergence with a very big wick, which is not preferred. So I don't really enjoy keeping this one on the chart. Locally, we had a bullish CVD on the chart over here. This one played out as price took this high, but it also in time created a bearish CVD divergences where the target is this low. And that is something that we do have to keep in mind, because we do have 886 touches at the low as well. And if we're looking for a bigger move towards the upside in an impulsive structure, then for a wave 2, the 886 is a very rare target, while it is a common target for a wave B or X, increasing probabilities that this move to the upside is corrective, which in turn increases probabilities to sooner or later take this low, which also matches the scenario that I highlighted inside wave Y, right? Either a zigzag to the downside in an ABC, or a potential flat structure where you still expect this low to be taken at least one more time, but actually also this low over here at 60.1k. We also have some news today, Wednesday, the 15th of May, 2:30 p.m. Central European Time. So make sure you trade safe around this hour, because it might increase the volatility on the chart. And if we then look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are at the moment higher for the bullish scenarios compared to the bearish scenarios. The probabilities for the bearish scenario will only go up if you lose 38.5k. On the daily time frame, probabilities are also higher for the bullish scenarios compared to the bearish scenario, where based on probabilities, these would be higher to take this high before potentially at the later stage the low with that 3-wave structure up and then a move to the downside to take 56k. But that depends on what we see at higher prices, right? Proof of resistance there. More locally on the 4-hour chart, however, the probabilities are higher for an unfinished WXY, WX, and then a Y to the downside, either a zigzag in wave Y or a flat in wave Y, but expecting this low to be taken, aiming for the support, looking for proof of support as well. And let's see if price can find its way back towards the upside. While on the number 2 spot, we have the bearish continuation in a 1 or A, 2B, looking for a C or 3, which has lower probability. So in other words, probabilities are higher to take this high before the low, but of course we always aim for proof of support. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.